Hey guys.
Hello.
Hello. Happy Thursday. It's Thursday,
Happy
right?
Thursday. Happy Thursday.
Yay!
Yay!
Look at that. Go on.
Yes. Yeah.
Thirsty Thursdays.
Thirsty Thursday. I like that. Thirsty Thursday.
Mm-hmm.
Just hang on. I'm just having some technical challenges. Give us 2 minutes and I'll sort it
All right.
out.
Yeah. All good.
Yeah. There we go. There was something. Oh, come on.
So while we're waiting, Crypto Dave, how have you been?
I feel like we haven't talked in a while.
Yeah, I mean, like, sort of, maybe not, but not on the show, for sure.
On the show, yeah, it's been 2 weeks, right?
Mm-hmm.
Yeah. So we can talk about all things crypto. How are things for you?
Good. Yeah, I've been kind of watching kind of the NFT scene a bit recently, and outside of that, the weather's been pretty nice here too, so no complaints.
Nice. I have managed to fix my technical challenge.
Okay, good.
All of 5 minutes. So yeah, we're across Facebook and YouTube. I had some issues with Facebook. So we've not been here for a couple of weeks, right? We've been, I know Dave was kind of just getting his zen on sometime last week.
Sorry.
No, you're good. I honestly, I got a little bit jealous when you told me you were riding the train. I love the bullet train. It's one of my all-time favorite memories with my wife. Anyway,
you know, it's great unless you're riding down the train with 3 kids. Then it's a nightmare.
Can imagine.
I want to ask you a science fiction question, but I'll leave that to later. I'll leave that question to later. All right, so let's crack on. So we've got 3 topics that we wanted to discuss about today. I think the last one is probably going to take up the majority of the show. So, but if we can get through the others relatively sharpish, and then we can move on to the NFT and Dogecoin, then that would be great. So, Crypto Dave, you mentioned that there's some scrutiny in the Binance area at the moment, right? So what's happening there, mate? What's the crack?
Essentially, Binance is always kind of operating in the kind of the gray zone. A lot of exchanges that have started in different kind of countries have started with going to, regulations, getting approvals, and doing things in a very kind of, I guess, correct way, a proper way of doing things. Since, something like an exchange or Binance or anything that's essentially is a cryptocurrency trading platform, it's all web-based. So technically, regardless of where you are, the product can be provided. Now, for a while, in terms of regulatory perspective, you only needed a regulation to operate an exchange only if you had a fiat onboarding functionality. So, for example, you have pesos. You want to trade pesos into cryptocurrency, you need to have a regulation. You need to have a green light from regulators. Binance started with only crypto to crypto trades. So you have Bitcoin, you want to buy some Ethereum, you can go ahead and do that. So that's how it started. That's got really, really big, and they started to put lots of fiat onboarding after that. But now they've gotten so big, a lot of regulatory bodies are saying, hey, look, now you guys are operating in a space where you're not technically, legally doing it. We got legal exchanges locally to do it. So they're putting out a lot of warnings in terms of saying don't use Binance, or outright banning it in certain locations as well. So that's also happening in Binance as of late.
So I guess the fact that people are talking about banning it, that defeats the whole purpose of cryptocurrency, right? Because the idea is that it's a decentralized, currency, if that's the correct terminology. Is that right? Am I looking at it the right way?
Yeah, it is. So you can trade cryptocurrency from one person to another. But the problem is people are looking for liquidity. And the easiest way to look for liquidity is go through these centralized exchanges, which are being run by an organization. So that's the difficult parts regarding, with the whole decentralized model. But at the same time, people within the space don't really understand how to operate without some kind of centralization, right? You want to go and save money somewhere, you save it at a bank, right? You want to go and transfer money from one place to another, you use something like a Visa. essentially is a corporation sitting between doing something in terms of transactions. People are not sophisticated enough, or the platforms themselves are not user friendly enough to actually be able to create a decentralized exchange what's easy for the regular Joes on the street to use it essentially. So these guys who are got really, really big are starting to get a lot of scrutiny in terms of what they can and cannot do, and see where this will lead us. Where finance cannot be ignored in that sense. I'm not sure if any input on this in general, but
yeah, I mean, like there's probably like a sort of like a convenience triangle, or some sort of triangle where it's like you've got like convenience, compliance, and like security, and you can only pick two. You can't pick all three. And the centralized exchange side is certainly convenient. As I said, it has all the liquidity. In many cases, the user experience is pretty good because you're able to use familiar things like your online banking to put money in. You can swap into different kinds of currencies, withdraw back to your wallet if you want to. There's a little bit of like a convenience in not really having to take out the money. You could leave it in the exchange if you want to, although that you're losing out on the so you've got you've got your convenience and the compliance there, but not so much the security, because if something happens to that exchange, then you're kind of effed. So there's like that side, but the other end of the spectrum is like where you've picked like secure and maybe compliant, or maybe not even any of them, but like fully decentralized exchange products do still have a little bit of a hurdle in terms of onboarding. There are, if you're going to try and pay with fiat currency at some point, there's going to have to be an on-ramp, or either some sort of trust mechanism where you put money into escrow and then have that person send it to the other person once you've fulfilled on certain parts of the transaction. So I think it's kind of highlights that we've got these two different things, and eventually we're going to start, these two things might start moving towards each other, or maybe someday we'll have the magic unicorn answer to have all three of those things. But until then, people can, or regulators can throw a lot of hate towards finance, but it's going to be hard to stop services like that from popping up. To replace it, it's going to be very hard to do, and it's also very hard to police. So on the user side, if they never KYC, or if they never actually trade in front of someone who's watching, they would be able to do it without any interruptions. So
cool. I noticed that when you were going the triangle, you were desperately searching for another word for security that began with C. So you had a nice 3C triangle.
Yeah. I was like, it'd be nice, but yeah.
Cool. Thanks, Aya. If you don't mind, let's come to you with the next topic, which is something along the lines of interest-paying platforms. So, what's the crack there, guys? What's happening? And basically, what is an interest-paying platform? Because I think there's scrutiny in that area as well, right?
Yeah, so the interest-paying platform is like the one like BlockFi, actually the one that we're going to be talking about a bit now. Essentially, where you deposit your money with them, they will lend you deposit your Bitcoin with them. They will lend your Bitcoin out to some kind of institutions externally, and then because of that, they will pay you a certain kind of interest payback in the Bitcoin, for example. So basically, it's a lending platform. It's kind of like your regular banks. You place the money with banks. The banks would take a portion of the money and lend it out to people, and they essentially keep a small fraction of it. It's called fractional reserve. That's regulated by the government. And the lending platforms do that as well. But BlockFi in particular in the US is getting a lot of scrutiny by regulators in all sorts of kind of states, saying that they're actually running a securities platform without actually, registering with the SEC. So I don't know why in particular they're targeting BlockFi so much, but essentially they have been definitely disrupting a lot of services and also disrupting a lot in terms of the interest payments to people as well. It's been decreasing a lot recently. I myself use a couple of interest-paying platforms as well, including BlockFi. But recently, there's been a lot of scrutiny regarding that, and I just don't know how that's going to play out in the future. Regarding that.
So what's the main benefits of BlockFi? Is it the fact? Is it just like a bank where they lend your money out? What's the main benefit, mate? How does it work?
Yeah, essentially is what it is. One thing is you can deposit with them. You can get an interest rate. And obviously, the interest rate is much higher than whatever banks are paying. In the States, they're paying 0.25 at best. And they lock you in for many, many years as well.
Really?
In BlockFi, they pay you. Well, now it's pretty crap as well. But at one point, they were paying you 5-6%.
Wow.
It was really, really good. So if you look at Bitcoin appreciating so much over the years, plus it paying 4 or 5% or 6% paid up in Bitcoin. Essentially, if you look at it from long-term perspective, you're probably getting paid interest rates of 15-20% if you look at the increase of Bitcoin as well. If you look on a dollar perspective. So it was really good. And people were actually depositing the Bitcoin and then earning a whole living off of it, like 100 grand, 20 grand.
Really good, but not sustainable. At least in my opinion. I mean, 6 to 8% is like pretty intense, and they're probably, they're not doing anything like necessarily wrong, but I just think that it's like a pretty aggressive risk model. If whatever they're doing to earn interest and pay out to the depositors, then it's not. I just don't see how that could have lasted for very long.
Yeah,
it doesn't sound like it's sustainable, right? I guess that's what I is saying, Dave.
Yeah, on the other side, what they're also allowing you to do is they're allowing you to take your cryptocurrency as collateral and get an instant line of credit from them as well. So, for example, you have 200 grand in Bitcoin. Rather than, if you need cash, rather than sell your Bitcoin cash out, what you can do is you can put your 200 grand as Bitcoin collateral and then give you $100,000 in loan instantly, right?
Okay.
It's a bit high in putting your cryptocurrency as collateral, and based on the volatility of Bitcoin as well, you might get liquidated without wanting to be liquidated. But there's also a way to take your current cryptocurrencies without having to sell it. And if you need some cash, you can use it as collateral to get cash as well. That's also you can do within the stock market as well. If you have certain stocks, you don't want to cash out your stocks, you think there's growth to it, but you need money now, you can take your stock as collateral and also get a loan against that as well.
There's a lot happening in the space that I don't know about, to be honest with you. So I'm really appreciative of you guys taking the time out and educating me. So this is great. Talking about educating me, let's move on to the last topic. And this is one that has baffled me since Dave and I first spoke about it a few months ago. And I think we're going to use Aya in terms of her expertise and knowledge. So let's talk about these two things. So the first thing we're going to talk about is NFTs. Now, I've seen those all over social media recently in terms of, celebrities are selling NFTs. And I'm still confused about what they are. So if you were to meet me in the street, and I am not the most intelligent person ever, how would you go about explaining what NFTs are and why are they suddenly the hot topic that everybody's talking about?
Yeah. So I guess in its current most common form, I would say, this is a digital content where the ownership is recorded on the blockchain. What you see in Twitter right now is like a lot of images, videos and stuff like that made by various artists. And you can buy what they would say the original or legitimate copy of that. I think the natural question is like, if I did that, then what's different from me just looking at the picture and saving it or taking a screenshot of that? And the difference is, well, if you do that, you can't prove that you own it. If you bought the NFT and the ownership is recorded on the blockchain, then you can say, Aya, who is in control of this Ethereum address or whatever currency it is, do own the official copy of this because here is the signature that proves as such, and it's written on the blockchain, which can't be tampered with. I think one of the reasons why it's really blown up in the news recently is just because the value of a lot of NFTs has really exploded. You have like famous artists like Beeple. Historically, you've had other NFTs like CryptoKitties. Even before that, Rare Pepe is another one. Yeah, NFTs have been around for a while, but they've really exploded in value at the moment just because of, I guess, exposure in the media. Now, what's the fun part or important part of this, I think, is it challenges what our definition of value is and what ownership is. If I told you, okay, this JPEG, this random image that I made is worth $2 million, there's a few ways to think about it. One is, does it have artistic value? If I just made something in like 2 minutes in MS Paint or whatever, like you might say it has low artistic value. But if it was really funny and like I had built a whole community around this image as a joke, then it has like cultural or like community value, right? And same with like if I bought something and I happen to be, loaded with cash and only I can afford to buy it, and I make this image now my profile photo, then it has like social value, right? Like I have like a rapport or like some kind of like ranking in a social structure. So there's all kinds of different sort of values that are coming from NFTs. And so I think when people, first question, well, that image certainly can't be worth $2 million. It's not even a real painting. Maybe just keep in mind that it's not artistic value by itself. It has many different kinds of value tied together with it.
Excellent. So yeah. What does NFT stand for?
It is a non-fungible token. So fungible means like can you replace something with something else? The opposite of non-fungible token is like, fungible token. An example of that might be like, in Canada we have like the Canadian dollar, and $1 equals $1. If I give you $1, it has the value of $1, and I can replace it with any $1, and it's all the same. Non-fungible tokens refer to exchangeable items that have a uniqueness and are not really interchangeable. So in this way, the word non-fungible token can take the form of things like art, because like you have one particular artwork and it's unique. It can take the form of a digital object, let's say in a game. If I killed a monster and as a reward, I got this cool helmet, and it was like a unique helmet in the game and only I can own it, then that would be also an NFT as long as it's using blockchain at some point. So just imagine it like as a unique item. It refers to something that can't be replaced, or like something that there's a limited number of copies of.
Okay. So there's nothing stopping me right now going on Microsoft Paint, for example. I am the world's worst artist, right? I would struggle to draw a line person, right? I'm awful. But if I had a community or if I had a following, I could go on, draw something, and then I could say, well, for me and my community, that NFT is worth X amount. Something like
sure.
that.
I mean, it ties to the value of you as like how much entertainment value do you hold? How much fandom do you have, right?
0. But no, right. That's really cool. Yeah. That's really good. Dave, I know we've spoken about this in the past, right? So what's your take on NFTs, mate?
I think I'm getting a little bit old. I understand the idea of NFTs, but I don't understand the idea of NFTs. But I think, where it actually leads to be very interesting is I think there's going to be new licensing models in terms of the ownership in NFTs and how you go licensing that. So yeah, I think that market is still very immature. And I think maybe this is one of the reasons why NFTs has blown up, because not only about ownership of it, but now you own it, you want to license it out to whoever. Now there's some licensing play to that. So you're looking at, how you can take that and create another business out of it. I think where also it leads up to another discussion. This is something that, has been discussed in quite some time, but it never came to true fruition until more recently, is tokenization of goods. So for example, now I own a $50 million worth of NFT, okay? Now what I want to do is I want to go back and make this into an investment product. So what I do is I can create another token and say, hey, look, if you own this token, you'll get a fraction ownership into this NFT. So it creates ability for very expensive products that are not accessible to regular people like you and I, maybe you. But I'm going to say, hey, look, I want to own a small piece of it. So I'll buy a couple.
That's already happening.
It's happening, right?
Yeah.
And then they will also, now they will do is they will also put these tokens onto exchanges as well. And then you create liquidity into something that's very illiquid to begin with. I think a couple of investment companies are doing this already. They're getting some slaps by the SEC on this one because it's technically securitization of something. But you can start moving out from the digital world to physical world, like something like an apartment, the whole building. You want to, tokenize Mona Lisa. I don't know if you can do that, but I mean,
timeshare.
Timeshares and things like that. You want to look at tokenization that shows your ownership digitally for one product, one kind of asset, and then be able to put it onto like an exchange to create liquidity. Oh, I don't want this timeshare anymore. I'll put it on an exchange. I'll sell it off, right? It became like a tokenization and creating liquidity in everything in our life. Essentially, is where it's kind of moving.
Wow. Are we looking at the death of money, old money, kind of paper coins? It's not far away, right? Surely.
I mean, yes and no. I think money will never die, right? And if it's just kind of like a change in format. And even if you digitize the wallet, if you revolutionize the wallet, that includes your money, things like your ID and all that stuff. There are like some just inescapable conveniences of cold hard cash still. So I don't see it really dying out in entirety for a while.
No, you're right. I not thought I was just kind of swept away on the wave of enthusiasm that Dave was sharing there.
Very easy to get on the train there. Yeah.
Yeah. Dave and his bullet train. Right. Dave, the last topic you wanted to talk about, mate, was, I don't know how we view this. I think we have mixed views over Dogecoin, right? So what's happening with our favorite coin, mate? What's going on now?
I don't know. It's just really weird. I don't know why people are talking about it. I think it's a pump and dump. Is it something about like the developers of Dogecoin come back together and doing something? Oh yeah, is that what it was? And then,
is this like the Full House like remake where it's like 20 years later they all get together and make a new season?
Oh really?
No, it's not like that. But I mean, like I said, right? This is cultural value, and the cultural value is what gives any value to Dogecoin. It has not really any particular. Pardon me for saying it, but it doesn't have any particular like technical merit beyond other clones of Bitcoin, but because of the community, right, and the cultural value and the funness of it, people have fun with it when they use services that take Dogecoin or whatnot. Like there's that kind of entertainment value as well. So these kinds of coins, as long as in a sense. In that way, I think that they have a similar property as like NFTs. You're going to have meme coins, like meme as in like an internet joke, right? Like you'll always have meme coins as long as there's enough people behind it and the people are having fun and don't really care too much about value.
It's all
about the culture that we were talking about before, was it? Sorry, Dave. Carry on, mate. Sorry.
No, sorry. There's a guy called the Dogecoin Millionaire that got really on Twitter. Basically, he got really famous end of last year, beginning this year. Essentially, he took all his money, he borrowed the money from his parents or family, and took a leverage in terms of a trade. It was roughly about $200,000 or $300,000, and this is when Doge was like 5 or 6, 7 cents, and threw it all into there. He's basically his life. He threw it in there, and then he started to go on Twitter when that amount hit $1 million, and he became the Dogecoin millionaire. And then he was saying that he's never going to sell Dogecoin. I think at one point his total value came up to $4 million, and then it came back down because of the crash and up and down. And he says he will not sell a single Doge until it hits $10 million in terms of his net value. And then now he's saying that he's had enough of Doge. He's going to still hold it, and he's going to throw all his money into Cardano. I know, Aya, you don't really like that. But anyway, the point is, as long as you have these kind of guys who are just hyping up the market, they have a lot of followers, there's a lot of cultural value, and that creates real value as well. But I think Dogecoin is weird. It's very, very ordinary. And I went up on my money into it personally, but
I've not put anything in Dogecoin. I followed your advice, Crypto Dave. I've not gone with Dogecoin. I've gone with Bitcoin, Ethereum, and then Polkadot, and then the tip that you gave back in June, Tesso, was it?
Yeah, a little bit of those. Yeah.
So I don't know if you know, but Tesso is one of the sponsors of a Formula One, an F1 they call it now. When I was growing up, it used to be Formula One, but now it's F1. Down with the kids, right? Anyway. But yeah, Tessos are one of the sponsors of, I forget which car it is. It's an orange car, so it's not McLaren or it's Red Bull. Oh, I forget. Anyway, so they're getting more and more exposure. But I'm happy with my choices, mate. I'm staying in there. I'm holding on. So yeah, I'm cool.
Cool.
All right. Is there anything else, guys, that you want to talk about today?
No, not particularly. I think there's another big option expiry for Bitcoin this Friday. So usually when this happens, we'll see some volatility either up and down. I think hence one reason why Bitcoin's been pumping recently. So yeah, keep your eye on it. This Friday and come the weekend, there should be some volatility, hopefully to the upside. But it's looking green today, which is good.
Excellent. Perfect. Yeah, how about you? Anything else you want to share?
It's all good. My financial advisor here, he's telling me that it's time to get back into the Dogecoin market. So maybe I'll take his advice. Yeah.
There we go. Perfect. Guys, thank you very, very much. Really appreciate you taking your time out. Audience, please let us know what you'd like us to discuss, any questions or any concerns or anything you want to know more about in the crypto world. Get in touch. I won't be able to help you, but these guys will. All right. Take care, everybody. Have a wonderful rest of your day and have a great weekend. Thank you.